Hello and warm welcome to the home of high probability trading. My name is Tim and I'm one of the traders here at the live trade room, and we're about to trade the US Open fully live and interactive for you. Just before we begin, those of you that are perhaps interested in genuinely markets to be consistently profitable over time, to trade these markets from a position of knowledge and understanding, with adherence to effective, strict risk management when you trade, knowing how much capital you're committing to each trade, and sort of viewing trading as I suppose a little mini business for yourself, with relatively low barriers to entry. However, what you want to do is use your capital to grow and to make more capital over time. And we can certainly help you with that as an organization. So the live trade room has been set up to provide you with all the support that you need to engage with these financial markets and learn trading from the ground up. So there's a wealth of education there. We have daily live trade rooms which you can join us every single day. You'll have someone to bounce ideas off, for us to put you on the right track, perhaps to just fine-tune your approach. And we do that for those that are new to this environment, those that have been around for a few years, and also those that are really quite experienced. And we can just fine-tune little things that may ultimately improve your overall profitability and bottom line. So without further ado then, let's start. And for more information, just go to a website, thelivetraderoom.com, for more information, and we'll you feel free to speak to anyone through our website if you wish. Okay, so let's start with a risk warning. We've had a major news event from the BOE just there a few minutes ago. We're looking at some of the charts off screen. Of course, take note of the risks involved in trading these financial markets. Very important you do that as a trader. And we get straight into this news event. So today is Thursday, the 6th of May. Already these months seem to be ticking by pretty quickly. Now, what we've had is the BOE, we've had the asset purchase facility, which has been up at these higher levels, the 895 billion level, which is very, very significant quantitative easing. And we've got this, we had a bit of, when we look at the purchase facility votes, members of the MPC get to vote. There's 9 of them in total. They get to vote on what they should do with the, I suppose, the rate at asset purchasing. And on the right hand side, you've got those that are happy to just maintain the asset purchasing facility as is. You have those that in the middle that want to decrease that number, and you have on the left hand side those that want to increase the 895. And it was interesting, we had a bit of dissent from the MPC. We had one member vote to actually start that tapering process. So bringing this number from 895 billion down to 825, I believe. So we're talking about a 70 billion reduction in the asset purchase facility. So we're beginning to start that little tapering process. What we've also seen is very encouraging, very, very positive growth figures come out for the UK over the course of 2021. We're expecting to see a growth rate, a GDP growth rate of 7.25% over the course of 2021. Very, very significant growth. The problem with growth pushes asset prices higher. It creates that inflation environment, and as a result, will the BOE then have to increase interest rates? So this is the interest rate picture here. We're at record lows, virtually at zero. We have been for the majority of the year now. And if I just zoom out, you can see where sort of normal levels of interest rates are sort of between 4 and 5 and 6%. This is really going pre-financial crisis in 2008. Slashed, the BOE went through a process of absolutely slashing, race to the bottom interest rates, and they maintained those 0.5% levels for probably 7 or 8 years, and then we've just been in this up and down territory for a little while. Excuse me, I do apologize. And as you can see, COVID, we don't really have the bullets that the BOE had back in 2008. We were bouncing off a very, very low height, but we're virtually down at zero, and printing lots of cash in the interim as well, with quantitative easing, this asset purchase facility, and the tapering of that starts to unwind and just start to slowly, very slowly, just remove the stimulus. And the BOC have done it. The Fed they've got a bit of a problem. They're not really quite willing to do it just yet. And now we've got some dissent from certain MPC members suggesting that in actual fact we should start tapering this amount. The BOC, just out of curiosity, we're looking to reduce it by 25%. The dissenter, really, the member that voted to reduce the asset purchase facility by about 70 billion, is a much smaller percentage, of course, than the BOC. So every central bank will have its rates at reducing the asset purchasing facilities. So it's just about tapering quantitative easing, basically. And we're down at all these lows. So the next step at some point with the high growth rates is that the ECB are likely to start increasing interest rates. And if that's the real case, then we should start seeing a little bit of positivity creeping into the British pound. And that's pretty much what we shall have a quick look at now. So while we're talking about the BOE, that this very well may be a little bit of a focus for this trading session. You can see we got these multiple highs just in here at 139.29, and we're just breaking above that. So let me show you what's happened in the last 15 minutes. This market had been trading sideways for a prolonged period of time, really. If I just get up our pen. So you can see the range of this market. You can see the highs in here, and you can see the lows. And if you go in a little bit tighter, the range has been, a lot more consolidative in the last 3 days, perhaps. And we've seen initially the move off the news where the pound started to weaken initially, and now we've returned and we've now broken above this level, which is quite significant. So an easier way of sort of assessing what's going on is look at it at the bigger time frames. You can see the sideways moving pattern. You can see now the structural failure trade to the upside above that 139.29. So what we can do is we can look at this market in detail and judge. We can see that we've pulled back off the 139.38. We just pulled back 15 pips or so, and now we're looking to extend higher, and that's coming back off the highs. So this is why we don't necessarily jump into the news events off the back of the news. We kind of want to wait to see what is genuinely the commitment of others. And so far, it is the genuine direction is to the upside. So that would be very much in keeping with the news event, the high growth rates, the potential for tapering of the asset purchase facilities, and the potential for increasing interest rates further down the line. So it's just likely to be quite positive for the British pound. So now we can just look at the price action in the pound and suggest, right, well, what do we want to see happen? And don't forget, when we trade financial markets, we want to be in control of the decision-making process. We don't want to be pushed around by this market. So if markets break to the upside, we can either obviously get in on a breakout trade, or we can wait and be patient for the pullback trade. So in and around here, which prices are coming back to that level now, might give us an opportunity to take the next leg to the upside. So and that looks like that is what we're getting. So if we see some turnaround price action down here, so what that looks like is, price just starts to run out of steam and looks like it's beginning to turn, then we can look to get in, because this is a strong level of which would be support, wouldn't it, at these levels. So there's our level of support. So really we can just monitor this price action now and look to get in on the trade. So we'll get ready for that one now in just a few seconds. So last night we have our trade plan webinar every evening, so that allows us to set up for opportunities. We haven't really had any follow through in some of the trades that we're looking at. So what we'll do is we look at the pound. So instead of the New Zealand dollar, which is really not really doing anything, we do want to try to keep a close eye on the pound dollar. If we can keep a close eye on it, right. So we just look at it. So a little bit of indecision now. So we started off really quite bearish, and that turned around pretty quickly. So this is a lot of the news traders, and they're getting chopped up. There's a lot of people selling, and they've got chopped out to the downside, and now there's buyers piling in, and they're getting chopped out to the upside. So very, very nervy start to sort of the pound. And what we can see is we're pulling back into consolidation. So right now, the clarity of the move is not fantastic, is it? So, and this is what we want to take into account when we're trading. It might be just pull back into support. So in and around these levels, we might get that next leg to the upside. In fact, there might be a trade for us to get involved with right now. So we're just pulling back off the high. So you want to see a bit of a rejection to the downside, and you want to start seeing when the market closes, when the candlestick closes, you want to see these prices begin to strengthen and start to push higher. And if so, we can look to get into the trade. So just want to comment just briefly on some opportunities elsewhere. Let me get rid of one-click trading, and you can see we're just So we can see that there's a little bit of exhaustion up at these highs, and we're now pulling back. So let's see at what point we'll start getting a little bit of support. So we'd expect the pound to strengthen, and that's what we're beginning to see. So now it's just a case of timing, and see if we can time that potential buy trade. Okay, we were in the euro pound to the downside, and we've had a bit of a really strong reversal in today's markets to the upside, but now all of that is unwound. We were hoping to stay into it going into the BOE just because we were likely to get some positive news, but as you can see, the volatility this morning was a little bit on the excessive side. So we can go back into that and have a look for a structural failure trade to the downside. So this is the reverse. This is on a 15-minute time frame. So what we would like to see with this one is even it can push higher, but you want to see that little rollout trade. You know, that would be a high probability sell trade to get back into it. So this is a really strong rejection of the highs. So hopefully there could be a pound euro sell trade. Let's have a look at the euro dollar. The euro is really quite strong today though, isn't it? So that's the problem with the euro. So we'll certainly keep a little close eye on them, because if this starts to roll off, and the more recent direction in the euro dollar has been actually to the downside, but we have these bullish days in between the selling, so it does make it a little bit more challenging for traders. So we'll monitor the pound and the euro just across the top three markets. The other currency pair we were looking at last night was the euro yen. So let's have a quick look at the euro yen. So short-term selling below the 130.93. As you can see, markets opened up and the dollar started to strengthen again. This was a this was a level that we put into our trade plan, but it come with a risk warning because of the if you look at the price action again, we're running into strong levels of support, so you're likely to get a little bit of an uptick on this market at some point, and it's actually kicked in from the open. So we can probably discount that one just for the short term. So we're also looking at the S&P to see if we will actually get this little rollover trade to the downside. The price action has been underwhelming the last 4 days really, starting Monday with an impulsive move to the upside followed by the reversal. Tuesday we saw some extreme selling as a result of Janet Yellen, followed by the reversal. 40-50% of that bearish move reversed. Yesterday we saw some really quite bullish price action which reversed, and now today we've seen slightly less bullish price action reverse today. So really our bias is still to the downside, believe it or not, but it would be very short term. The overall trend in the S&P and the US markets are very much to the upside. So these markets are in the process of just pulling back slightly. You see, the problem is with a buy trade at this pullback is we do have a bit of a sizable low in there. So if you're getting in at 39.20, let's say, there's a stop loss at 138.50 or 55. So you're talking about, you know, a 70 pip stop loss, which is not ideal. We could probably work with this low. So we could probably work with the 38.84 level. So we're still talking about a 40 pip stop loss on the pound dollar. You see, here's the problem. Is this a double-edged sword? That's what's a concern to investors and traders right now. Growth, fantastic, really impressive. Does it mean interest rates are pushing higher? If so, that's a big problem. Looking at the bond yield. So, like, if you just compare and contrast, really the 10-year yield in the US, and I don't know if you guys are even bringing bond yields into your equation right now, but they are a very strong theme in these markets, and it's to do with a government selling debt to try and raise some capital to spend it on social services and a whole range of expenditure-based projects. So it's a very important sort of link in the financial system, and we've got bond auctions next week for the US dollar, and it's worth keeping an eye out for the performance of those bond auctions, and because the reason being is it all boils down to demand. If there's such a poor yield or return from committing your capital for 10 years or 30 years, and we're talking about big institutions here, then the demand for those bonds might be quite low. Those governments won't be able to take the money in to kind of support, whether it's wages, whether it's businesses, whether it's social services, whatever the case may be. They'll have to make some cuts accordingly. So the bond market has to function quite well. The problem is it's been relatively defunct for quite some time. But the concern would be is if there is a reduced demand, then yields will push higher. And if bond yields push higher at a rate that's very uncomfortable for these markets, and we saw it at the beginning of this year. We saw a really strong impulsive move to the upside from 0.9. By the mid-March, we were up at sort of 1.7. So, that's nearly doubling the bond yield in probably 2.5, 3 months of a time period. So that's why the markets got really quite rattled during that time, and it's still a cautionary tale for these markets. To just compare and contrast the bond yield, the equivalent in the UK, the 10-year gilt, similar type of explosion to the upside from 0.2, let's say, up to 0.8. So we saw in 2 months we saw a very sharp increase in the yield price, and it was to do with the dwindling demand for the 10-year note in the UK. You can see what's happened since. There's a bit of stability creeping in, so it's just drifting sideways, and we have the Fed and other central banks working very hard to say that this inflation story is transitory. It's not prolonged. We're likely to see a significant uptick, but nothing more than that, and that it's all under control. The only problem we get is if the Fed get it wrong. If we enter a situation of hyperinflation, becomes a major problem. You can imagine debt-laden economies, businesses, households. If interest rates starts going up, we all start paying more for our mortgages and other loans, and it means you have this less disposable income, which is therefore your manufacturing and services start taking a hit, production starts taking a hit, and it's a downwards spiral, and the central banks can actually increase rates to sort of offset some of the inflation concerns. They do it too much, it becomes another problem, and this is the issue really for central banks now in the coming years, is that how do they manage this inflation story? Right now, the Fed are saying no need to panic, it's all under control. We can see how things are going to play out. We've still got relatively high unemployment, so that needs to. Everyone needs to have a job with money in their back pocket, basically, for this to be a very significant problem. And we've learnt really over the last 12, 13 years to go with the central banks, because ultimately their policies have borne fruit and have won out. So we're entering a phase now as to whether could they ultimately be losing credibility if they get this wrong, and then things start to get very excited very, very quickly. So we'll see how all of these things play out. But I'm just looking off screen as well as I'm talking at the pound, and you can see that we've just bounced back to a little bit of support in here, and there's a potential buy trade. And we could probably use the 38.84 level to the upside. So it's finding a little bit of support, not so much in the euro pound. So we shall execute a trade then in the pound dollar. Okay, so we've got our deal ticket ready, just waiting to see just what happens to the price here at that 139.20 level. Okay, it's just selling off now. So you can see it's running in. This is only on a 5-minute candlestick chart, but there's a 50 period moving average just sitting in there. We can use things like a Fibonacci retracement. So we'll see. So we'll take swing low. We just change this to a color that we can okay, let's work with just a green level in here. So this is quite close to being a, let's bring it down just a touch. So we're finding a little bit of support around this 38.2 level from a Fibonacci perspective. So we're just looking at some information off screen. So we're getting ready to pull this trigger in this buy trade. We just want to see a little bit more progress to the upside if we can. Because if the market is rolling lower, and you want it to find a bit of support. But if you see that market continuing to roll lower, then it's obviously just telling you to just be a little bit, try and get that timing right if you possibly can. We'll just take this down to there. So there's a strong level of support in here. So we're quite comfortable with sort of buying roughly at this level. But we'll just see if we just get some continuation trade. Because if we break above this little high in here, then we would just feel a little bit more comfortable about a buying trade. And we're just getting our deal tickets ready to go. So you'll see us get into the trade. Okay, so we're just closing quite close to these highs. So let's see if we just tick to the upside, and then we'll get into that trade. Right, okay, and we'll place our stop loss at the 38.80 level. At 138.80. So that's us in on this little buy trade. We've got to go with a slightly larger stop loss than just going really in quite tight into this level, the 39.09 level. We've actually got our stop loss actually below the 139.00 level, which would be important. So let me see. Yeah, so it's the 138.80 level. So we've had our news, it's quite positive, and it should give us a little bit of a swing to the upside. So there's our pound dollar trade to the upside. We have the fundamentals on our side for now. The reason why, if this turns to a bit of panic, then we can start seeing the pound begin to sell off a little bit. So we just need to be mindful of that, really. So we're getting that little uptick now. Okay, so there's the move. We just have sort of a few factors in our favor. We now need this market to break above the 39.35, and if we can clear this little high just up here, we can then probably mitigate risk on the trade, or most of it anyway. So will we get the continuation trade to the upside? That's the big question. So we've actually seen the initial move lower, we've seen the reversal, we've now seen the commitment of others pushing prices higher. It's quite a good news story for the pound. So we've seen prices swing higher quite significantly from 138.56 up to 139.35. So there's a significant amount of volatility in the trade, an 80 pips swing from low to high, and now we get the customary pullback, we get the little pause, and now we're looking to get into the trade to the upside. So let's see if we get some continuation in that move. The euro pound, euro dollar, should I say, is still performing quite well. So we don't want to trade strength versus strength, so we'd be looking for the weakness trade, and that's the pound versus the dollar. So we're in the S&P to the downside. Been in that since actually Tuesday. So we've had to put up with this awful price action, but we do have a technical stop loss. So we have that in our favor. And it's that breakout sell trade. Now it's more of a reversal trade to the downside, but it's still below that 41.71 level, which is still intact. We can take this out of the equation just for the interim. So we'll keep an eye on the pound dollar. So what we can do is we can remove this Fibonacci. We can mark the low, certainly. Few levels of resistance around these levels, so that's probably what this market is trying to work its way through. So we do multi-time frame analysis, and what that basically means is that we're always looking at the bigger time frames, and that's firmly a part of our decision making. So when we look at the daily time frame, the direction in this market is to the upside, as you can see, and then we're just scaling it down to just fine-tune what's going on, and we can see it, and the bigger the time frame, the more important the move is. So at 1 o'clock, for example, we will get the close on the hourly candlestick. So if this pushes on just a little bit between now and the next 8 minutes, if we can just close ideally around the 139.80 level, then what's likely to occur then is the hourly candle will close, will open up, and we'll start seeing some more capital coming into the upside. So your US market will be looking for opportunities like we are, and we're likely to see their capital come into the pound and push it higher. How much higher still remains to be seen, because we've got a strong rejection to the downside now, but there's plenty upside in this market on the daily time frame. So we do, of course, want to try and mitigate risk as quickly as we can in the trade, but we let price action determine when we mitigate and when we and when we break even, and then when we book in profit on the trade. So the objective number one is really for this market to close above the 139.35. So, and if that happens, then we are likely to see a decent sized move to the upside. We're just in this little corridor of uncertainty right now. The euro is still performing really well against the dollar. It's got a lot of work to do to stop us out, but it's not obviously impossible with any particular trade. And we predetermine our risk, so we know exactly how much capital we're committing to the trade, and we're comfortable with that level of risk. So that's really important mentally, to be comfortable with the amount of capital you're committing to a trade. If you're not comfortable and you're constantly watching the P&L, and you start getting a bit hot and you start seeing some physiological responses to the decisions you're making, then that's a sure sign that you're oversizing. You're trading at a level that's psychologically uncomfortable for you. And the problem with that is you'll be pushed around by the markets, and it's important to plan your opportunities, trade your plan. You have a little bit more confidence. You can obviously fine tune how you get in and how you get out. That's an evolution really over time. But you want to get the foundations right. You want to get the basis on which you're making decisions correct. And one of the first things with risk management is have control over your exposure. Know how much capital you're committing to a trade. We ask traders all the time, how much capital have you committed to that trade? And they'll say 30 pips, 40 pips. And that's not controlling your capital. That's telling us the pip exposure of the trade, which is very, very different to how much capital you're committing. So, and again, 1% is fine. But what we often find is that people can ever so slightly oversize or undersize. And if it's oversizing and you do that over 100 trades, that's a large portion of your capital that you're committing that you perhaps are not aware. So if I asked you how much capital you're committing to a trade, and you said, $50 or $60 or $100 or whatever the case may be, $200, depending on the size of the capital, and you said, yeah, I'm committing $200 to this trade, and it's 1% of my capital or 2% of my capital, I'd be like, brilliant, that's exactly the answer that we'd be looking for. And just to clarify, the number of pips is almost irrelevant, because that needs to be taken into account for you to calculate trade size effectively. So you have to know how many pips is your stop loss, and that's your pip exposure, and that's a part of your calculation to work out exactly how much capital you're committing to each trade. So it is that sort of approach. Understand your cost base, understand your risks. As you do in business, you spend an awful lot of time when you run a business understanding the risks, where they're coming from, where is money being spent, and do you have control over that expenditure? Same thing in trading. Have control over your expenditure in terms of the amount of capital you're committing to the trade, and just have control over it. You predetermine how much of your capital and how much risk you want to take on that trade. We recommend, when you're starting out and you're new to trading, for that to be lower, just so that you can spend more time in the markets, learning these markets from the ground up. And then once you get more experience and you get more confidence, and you start seeing kind of a return for your efforts, then obviously trading becomes a lot more exciting, but you've got a lot more experience that you can lean on. And all these things are really quite important. Okay, so broadly speaking, the clarity behind this market is not fantastic. We're kind of buying the pound off the back of a news event. So elsewhere, it's kind of a mixed bag really in today's trading. So we're getting reversals of the last couple of day moves, and nothing happening in the dollar yen. if you're going for that dollar weakness trade, you might be close to an opportunity below the 90.75 in the dollar Swiss. That would be a structural break or failure trade to the downside. The dollar CAD has already moved, as you can see. We spoke about it last night in terms of, below the 122.50 level, you'd expect continuation, but we're only just grinding lower, and it's really because the dollar is in there's a bit of indecision really with the dollar at the moment. Let's just refer to it as mild dollar weakness, and you can see that the dollar had been strong against the New Zealand and the Aussie, and it's kind of reversed now against the Aussie. Not quite just yet. It's still very indecisive for the New Zealand dollar. But really the stronger markets today are by far the euro. We just think there's scope really for the pound to join the party really. But that sell trade is a viable one in the dollar CAD. The only thing to be concerned about regarding the CAD is if you look at the oil markets. This is the daily view of oil, and it's pure indecision really. Yesterday we saw a lot of selling, a lot of concern about the uneven demand picture for oil. Yes, economies are opening up, but some are opening up, some are having, more closures and more concerns regarding the spread of the virus and the lack of vaccines availability and things like that. And the Chinese vaccine has an efficacy of above 50%. So then there's concerns. They're making it accessible to many parts of the world which don't have access to the US or European vaccines just yet. I'm sure that will be in the pipeline, but it's not happening just yet. So really, if anything, there's a bit of downward pressure on crude oil, which makes the dollar CAD sell trade. We probably want to be a little bit cautious. And the overview for the equity markets is can only be described as mixed. If you were buying the US indices markets, you wouldn't be full of confidence really right now. The Dow Jones is probably the exception. We've got new all-time highs yesterday and today, believe it or not. So that's the Dow Jones. The FTSE is threatening to push higher, but as always, it recently it's kind of flatters to deceive. Same situation often with the DAX. So after a month of sideways moving price action, you get 1 day of selling, and you think, right, now I'm prepared to start getting involved in that sell trade, and lo and behold, it kind of reverses. So this is why understanding these market conditions are really quite important. We got the breakout, yes, but did we get the follow through? The answer is no. So that allows us to be just a little bit patient. And then the Nikkei is threatening to break out of this little structural failure trade, potentially to the upside. So actually, if this market can break above the 50 period moving average and we break above 29,142 level, then we would probably at that point expect a little bit more of an uptick. Just in around this little zone here, we flushed to the downside again. This is a strong level of support in at these levels, and this would be the level at which we would expect prices to continue higher, or at least perhaps up to something like this, up to this little area in here. Let me put on our Squawk service and I'll see if there's any further updates to be mindful of.
More colour from this South China Morning Post piece says US trade rep is expected to talk to her Chinese counterpart soon to review the phase 1 trade agreement. They're quoting two sources familiar with the discussions. We'll put the full piece up on the board.
This price action since mid-February to early May is a descending triangle. We're creating lower highs in this market, probably another lower high, maybe around this level, somewhere like that. And we've got these levels of support just sitting in here.
The Bank of England governor says the risks to the GDP forecast for 2021 are skewed to the downside.
As a result, your high probability trades are actually below the 28,400 level. Are ideally, if you break these highs here, the 30,638 level. They are high probability trades, because what we're likely to see is a little bit of sort of further narrowing. That's often when you get these, until you get the catalyst for the explosive move to the upside or the explosive move to the downside. And there'll be something that will drive that move. And it's up to us as traders to be mindful of to be ready for that potential move. Bitcoin looks like it's going to start making new highs again. Such is Bitcoin. There's a buy opportunity above the $1,800 level. I know many of you look at gold quite often. It's not an active trade right now, just because we're in this little sideways pattern. But if we break above that $1,800 level, we'd expect perhaps a decent move to the upside. So as you can see, there's quite a few potential opportunities in the pipeline. They're not all in a great position just yet. So the beauty about consolidation, although it's very annoying to trade, is that you always get trends always start from consolidation. So whether it's its origin in terms of the start of a trend, or whether it's a pause in a trend, but those breakout trades in the direction in which the market is moving are really good trades to keep an eye out for. Dollar Swiss could be close to a potential sell trade. So we would expect these markets to push higher from here. We've now got US capital coming in, so let's see if they're identifying this trade as an opportunity. The euro is continuing its move to the upside, so let's just see the last 5 or 10 minutes. So this is what we're seeing. Just over the last 2 candlesticks, we're seeing a bit of bullish price action come in. So objective number 1 is for prices to close above this level in here. Once we get that, then we want to close above this higher level. So we're constantly talking to the markets, saying to it, this is what we want to see happen. And if we get above that level, we'd expect perhaps a decent move to the upside. The reason why we have those expectations is because, let's say this market just does this for the next 6 hours or whatever, and we keep threatening to break out, but actually all it's doing is consolidating. What we might do in a situation like that is bring up our stop loss and just not tolerate this market to actually dip down to these levels.
Bank of England governor, speaking about inflation, says it will rise above 2% at the end of the year. Says these temporary inflation effects, though, will have little to medium-term significance. Inflation expectations remain well anchored.
See, we're hearing this across the board, that inflation expectations are well anchored.
Foreign Minister Aragachi is to meet with the head of the IAEA in Vienna tonight.
We're hearing this from all the central banks. They're making it painfully obvious that they're not concerned about the longer term inflation story, that there's lots of anchors, there's lots of things that are just weighing inflation down. Now time will tell whether they're correct or not. At the moment, the market is believing them. But if that changes, then we can expect some big moves. So we clearly need to give the pound dollar a little bit more time. We'll look at it on the 15-minute time frame. So there's the price action over the last hour and 15. The euro dollar still looks really quite strong, and this was we were looking for a sell trade below the 120, which is the yellow line on screen. We only saw a very short-lived little break to the downside, so that's a false breakout to the downside. It's unfortunately, with our approach, it's a necessary evil to capitalize on this market breaking below 120. We only just got taken into that trade very briefly, but as you can see, it was a bit of a rejection to the downside. So we're currently pushing up, pushing higher. This might turn into one of these situations where tomorrow, if we start seeing some selling, and early next week, we might get a second or a third opportunity to sell the euro dollar, and all we're simply doing is looking for selling opportunities below the 120. It's really nothing more complicated than that. Today now there is significant strength in the euro. The Swiss franc is quite close to that little structural failure sell trade. You see that we're buying the pound dollar off the back of the news event, but the move that we're seeing in the euro dollar to the upside and the potential selling that's coming into the S&P is counterintuitive. So this doesn't make sense if you're talking about correlated markets, because this is on the verge of being a risk-off market condition, in which case you'd expect the dollar to strengthen. And the opposite is happening against the euro. It's actually weakening quite considerably across, a number of the dollar pairs. So really the euro is by far the strongest trade right now. The equity markets are really uninspiring, aren't they? So the S&P very likely to get rollover price action to the downside. The Nasdaq, same situation, rollover to the downside. We might end up seeing the same in the Dow Jones. We're really struggling to sort of break above, make new highs. A very significant indecision in the FTSE. The DAX has actually already begun to turn bearish, and the Nikkei is just bouncing off its highs. So, loosely speaking, we're in a risk-off market condition, which is normally likely to benefit the dollar, and we're seeing the opposite. We're seeing the dollar weaken. So when we talk about patience, those are conditions in which we generally would like to be patient. And not be too rash with our decision making when the overall market correlations don't quite stack up and make a huge amount of sense to us as traders. So I hope that makes sense. If there's any markets that you'd like us to look at, feel free to post it into the chat box. We're looking at a few of these markets off screen as well. So the euro is even beginning to strengthen against the pound. So it's just that euro strength against the dollar. The S&P or the indices markets threatening to sell off. Doesn't quite stack up. You could maybe justify a sell trade around this like zone. We'd be more comfortable selling below the 86.50 level, and what that would do is constitute a structural failure trade to the downside. So this market's pushed to the upside, we've reversed aggressively, we pull back, and now if it extends lower, then there's a structural failure trade to the downside, with a stop loss, easy to identify. So this could be your entry, that could be your stop loss, and you would expect prices to continue lower from here. Good afternoon, Andreas. Thanks for your message. The pound Swiss question mark. Yep, let's have a quick look at that for you. So just seeing this little pullback trade just kick in here, and we'll see if we get some extended moves in the pound dollar. So something that you guys might benefit from is a little bit of analysis in terms of assessing the pound Swiss as a tradable opportunity. Something you might find useful that you can add into the way that you trade these financial markets, and that's just a bit of strength and weakness analysis. So we can see one of the reasons why we look at the $7 pairs, the major dollar pairs, is firstly they're the most volatile markets out there. They give us the better opportunities, but we can also conduct strength and weakness analysis where we can compare one currency with another currency against the US dollar. So what we mean by that is if we look at the pound and we cross it with the US dollar, so we're looking at the pound dollar right now, you can see that it's indecisive, that there's very, very marginal pound strength against the dollar. And you can very quickly compare and contrast that to the dollar Swiss. And we can see that the Swiss is by far the stronger currency. So if we do strength versus weakness analysis, strength versus weakness, what we can very, very easily deduce is that right now the Swiss franc is by far the strongest currency. And what we can see is that the pound is marginally stronger than the US dollar. So what we can do is we can put the US dollar by far as the weakest currency, and we can probably add, if this was like a scale basically from strength to weakness, we can see that the pound is actually quite weak today, but it's not as weak as the US dollar. So the US dollar could be pitched around here. The pound could be pitched in around this kind of level, and the Swiss franc could be kind of up at these levels. So this is our strength and weakness indicator. So if you're looking at the pound Swiss, straight away with this analysis, we'd be looking for the Swiss franc to strengthen against the pound. So we'd be looking for an opportunity for, and I've not even looked at the Swiss franc, sorry, the pound Swiss. So straight away we'd be looking for the pound Swiss to be pushing lower. So with that information, let's go in, and you can see how quickly you can work that out and do that analysis. You don't need flashy indicators to tell you any of that. So then we can look at it, the Swiss franc, and you can see that from the analysis perspective, prices had been quite aggressively pushing to the upside, as you can see. So the pound had been on a bit of a tear to the upside. And you can see what's happened. We've had the pullback and we've attempted to make a new high, and now that is in the process of failing. So that sell trade becomes a really high probability trade, but just a little bit lower than these current prices. So what we can do is we can just take these levels in here. So we can look at the structural failure trade, and we're looking at this candlestick here and suggesting, right, well, now we're closing below that 126.24. This is your level just sitting in here. We've now got the close, fantastic. Do we get the follow through? So that's where we look at the next candlestick, and the answer is unfortunately not. No, we're not getting the follow through just yet. So now we're at the same situation here. Fantastic, we're getting the momentum to the downside. The next question becomes, do we get the follow through to the downside? If we do, then we can absolutely sell below that 125.97 level. There's your high probability sell trade. And avoid, if you can, certainly in our experience, Andreas, avoid making that decision inside this price action, because this is just consolidation and it's quite erratic and it's a little bit up and down. But once those prices break that level to the downside, then there's your high probability sell trade in this market. So and we put the level in there. In fact, let me take the exact level for you. Yeah, the 125.93. 125.93. So there's your exact sell trade. If you're asking us, our opinion and what would we do in a situation like this. So we've done our strength and weakness analysis. So we're comfortable with that, with the trade to the downside. The opportunity, although it's been selling off today, and when you see these little levels, the 125.93, you want to see a nice strong run up, and then you want to see the continuation trade. And if all of those tick your box, then you're left off with a no-brainer high probability sell trade, which you can then focus on. So does that help, Andreas? Have I answered your question? And do you have any follow-up questions, perhaps? We do have another trading session in about 8 minutes, guys. So I'm going to have to let you go in about 8 minutes. But we'll, in fact, today's Thursday, isn't it? Because we've had a bank holiday this week. So slightly shorter week than normal. But we don't have this session currently on a Friday. We will be doing soon. I suppose once we do get back to some form of normality with COVID, we'll be running these sessions on Friday. But at the moment, it's Monday to Thursday at 12 noon. So feel free to join us for that. Obviously, completely free of charge through our YouTube channel. So if you can give us a thumbs up, that's great. Or subscribe to our channel if you're perhaps new to this session. And we'll be live here every day. And if we can help you, we'll be delighted to do so. Okay, so let's put up these markets then. So the pound dollar is looking It's looking worse and worse by the second, isn't it? So let's have a look at this. So this is your structural failure trade now to the downside. So it just remains to be seen how much commitment is there for these prices to push lower, and we kind of wanted to take that into consideration really when we got into this trade, because the fear factor behind the increased GDP numbers, which are very, very good in their own right, but they're likely to push inflation higher, and that becomes a bit of a problem for your central banks. And it's the increasing or the decreasing of interest rates is what these markets are focusing on. So if inflation goes up, one of the mechanisms a central bank can use is by increasing interest rates. If you increase interest rates, it means the cost of people's debts start to go up, and then you can have delinquencies on the housing markets. You can have companies become insolvent. You can have people being made unemployed. You can have less money in people's pockets, so they're not spending as much, a reduced confidence, and all of a sudden these things start to take its toll. And that very well may be what we're seeing play out, which would be a concern. But we do have a technical stop loss. That's why we use these technical stop losses. They're not necessarily just arbitrary levels. They're and we did say we had a bit of a problem when we got into this trade in terms of using a stop loss which is really too large for a day trade. So we wanted to use this little handle in here where markets have been moving sideways. And the reason why we do that is there's every potential this market can bounce off those levels and continue higher. So just because it's currently pulling back, it's not a massive concern. It is a structural failure trade to the downside, which is really not good. You want to start seeing structural failures to the upside now, or over the course of the afternoon if this market is to prevail higher. However, going back to our risk management approach, we control our risk. We know what our exposure is. We're very comfortable with that exposure. So if this is a losing trade, then we'll reassess the opportunity, and we'll see if one exists or not. Andreas, great. Yeah, absolutely, my pleasure. You joined our channel, fantastic. So we'll notify you then when we go live. I don't know if you've clicked the bell function or not, but when we go live, you'll be notified and jump on and join us. So great stuff. Pleased to hear it. So these markets are in a bit of a strange place today. If I just fix up. Okay, so just before I leave you then, we've got really indecisive market conditions as far as these indices markets are concerned. Yeah, sorry, it was the euro yen, wasn't it? So a slightly counterintuitive trading day today. Equity markets look like they're going to be rolling lower. The opportunity is not fantastic. It looks like the pound dollar trade is pound dollar trade. We'll see if it can find a little bit of support in at these levels, but it's not looking good as things stand. The euro is continuing its little strength trade. The equity markets are not looking that exciting. So a bit of a strange trading condition today. It's a bit sort of all over the place. So one of the pillars that we teach our traders on a daily basis is there's times when you need to be a little bit patient with these markets, and that would certainly be on the surface what we anticipate these markets to be right now. Is let's be patient with them. Let's not be too aggressive. We'll see how our pound dollar trade. It should tick higher off the back of the news event, but as you can see, it may be clearing out the market and getting some of your retail traders, get them out the way, and then it may move higher. So we'll or perhaps the inflation figures are becoming a bit of a hassle, bit of a struggle. And although we're getting good, very positive GDP numbers and increased growth and increased employment and very well performing sectors like manufacturing and services and all these sorts of things are all really, really positive, there's this underlying inflation issue. And the increasing of interest rates is what the markets are really freaked out about. As we saw from Janet Yellen on Tuesday, where she mentioned that the Fed will be increasing rates, and then the markets dropped. This is the move that we saw really, really quickly off the back of Janet Yellen. So a bit of a rookie move, but you wonder if it's just planting seeds in the minds of investors and traders and preparing them for increased rates. Probably orchestrated to a certain degree. She's quite a savvy. She's always been a very, very savvy operator, and she doesn't seem the type to be making sort of silly statements like that. But there's a first for everything. Did you miss? Hi, Fakon James. Did I miss you discussing unemployment claims news? So this, the unemployment claims. You see, yesterday we had ADP. Today we've got these unemployment numbers, which are just now out. Okay, slightly better than anticipated. So not as many people claiming unemployment. In the US, we're expecting 540,000. We've seen a figure of 498,000. So obviously much, much better than anticipated. The big news really for tomorrow is the non-farm payroll. And that's the news event that is very likely to move these markets to a significant extent. So these unemployment claims marginally better. This is why it's kind of orange in color. The major news events are by far the red. And of course we've got the BOE. We've got the governor of the Bank of England, who is probably just continuing their speech, which is why we're probably seeing the pound begin to sell off. So when he finishes, we might see a little bit of an uptick. We're hoping to technically stay in the trade for as long as possible, and see if these prices can actually turn around. So all should be revealed pretty soon regarding the British pound. We will have our live webinar this evening and our Capital Growth live trade room as well tonight at 9 o'clock and 9:45. So we'll be looking to plan and prepare for tomorrow's trading conditions tonight. For those of you that are perhaps interested, you can go to a website and you're very welcome to join us there. And there's a chat function as well. So if you have any questions, feel free to contact us and let us know. Okay, so on that note, we do like the S&P to the downside. We like the pound dollar to the upside. It looks like we get that move over the session in the S&P, but we'll of course wait and see. And there's a few rejections now to the downside, which is exactly what we'd want to see. So hopefully we might still get some buying to the upside for the pound. Okay, elsewhere, a bit of a question mark over everything. Not great quality price action today, I'm afraid. So perhaps it's an opportunity to be a little bit patient. Of course, if you have a strong conviction behind a particular trade, then absolutely. But the market conditions right now are not fantastic, in our opinion. So on that note, guys, thank you very much for joining us. Give us a thumbs up if you can. Subscribe to our channel. Go to our website for more information, thelivetraderoom.com. And we will be back again next Monday at 12 noon. So from everyone here at the Live Trade Room, have a great weekend and we'll see you Monday. Bye for now.